Good day. My name is Dan Dennehy Rodriguez, and I'm the Medicare and Individual Product Specialist here at Henderson Brothers. What we want to do with this time is to go over the basics of Medicare. To give you context, my role, I am responsible for any kind of individual health insurance product, hence my title. All the different acronyms that you may hear, things like the Affordable Care Act, CHIP, Medicaid, and what we're going to talk about today, Medicare, are the things that I specialize in. And this presentation is designed to help you understand the basics of Medicare, how it's constructed, to give you some familiarity in how and when to sign up for your Medicare benefits, and some of the costs. One thing I would encourage you to do, because this is a pre-recorded webinar and not a live presentation, as you are listening and watching this presentation, I would suggest that you go to either your Outlook or your Gmail or your Hotmail and open up an email. Actually write out the different questions that you want to make sure are answered during this webinar. The reason why I say this is that as we go through the presentation, we'll probably cover the questions that you need heard. However, if we don't answer all of your questions, then at the end of this presentation, you will see my email address, and I would love it if you would send me the questions that you have that we did not answer during this webinar. So that way, these next 30 to 35 minutes are of great use and utility to you, and this becomes more clear. So let's jump into this. What is Medicare on a high level? Medicare is a program that over 50 million Americans are currently eligible for. And most people will assume that Medicare is something for someone of a certain age. And that's not necessarily 100% correct. Medicare is not just for people over 65, but also those with long-term disability or certain medical issues like end-stage renal failure, which means that 1 in every 5 Americans nationally is eligible for Medicare. That's 20%. That's a high number. If you're listening to this recording and you're in Allegheny County or Western Pennsylvania, you may be surprised to know that our area is the second highest population of people over 65 in the country. 1 in every 3 Alleghenians is actually Medicare eligible. And so why do I mention this? Well, I think one assumption that many people make is that Medicare is somewhat rare. It really isn't. Also, when you talk to people of Medicare, about Medicare, let's say a neighbor, family member, friend, coworker, even though people may be on Medicare or have been on Medicare for some time, do you typically get a feeling that those who are on Medicare truly understand it well? Probably not, right? So it's good to know this information. It's great to listen to this information because it makes you more knowledgeable about something which will affect all of us when we get to a certain age. So let's jump into the details. And the next thing we want to talk about are what are the different parts of Medicare. Medicare is broken up into 4 elements, 4 letters. The way that I always think of it, if you go home after work, let's say it's been a long day and you want to cook something easy for dinner, what might you do? You might jump into the freezer, grab a DiGiorno pizza, throw it in the oven, and if you're like me, what do you do when it's done? You cut it twice, which means you have 4 slices. I want you to think of Medicare that way, like a pizza made of 4 slices, because only 2 of them actually come from the government, and that's Medicare A and B. Medicare Part A is called hospital insurance, and this covers what we call facility charges. These are the bills that come from a physical health care facility. So think of it as an overnight stay in a hospital, the use of a surgical room, something like that. Part B, medical, covers our talent. So our actual healthcare providers, our doctors, our nurses, our caregivers, they bill what are called professional charges, and Part B go to cover those services. So the easiest way to remember the difference, A covers the people, A covers the place, B covers the people. Now, what happens if you have both A and B? Case in point, John Smith, which is the example we're using today of someone who's been on Medicare. Now, one thing to make quick note of, you may notice this design of Medicare card is no longer red, white, and blue. Rather, it's blue, white, and red. Now, why is that of interest? Well, two things. First, the new Medicare cards no longer show your Social Security number, which is a very good thing because it keeps your personal information more secure. But also, it's worth noting, it took the government over 8 years to print off and send out these new ID cards. It all occurred last year, but all the legwork of making the new Medicare claim numbers took some time to occur. Why do I mention that? Well, many people who I work with and speak with about Medicare, they're often concerned about radical and quick changes going on with Medicare and Social Security. Well, I cite this as an example of changes with Medicare. Sure, things change in life. The only constant is change. But when it comes to our government, it's pretty easy to understand that quick change, not so much. Things happen slowly and gradually when we talk about anything on a federal level, such as Medicare. So let's jump back into it. Now that we understand A and B and we understand these new Medicare cards, well, what does this card do for me? Medicare A and B is original Medicare. When you have both at the same time, that means that your actual health insurance is original Medicare. That's the name of it. And what does that do? Well, it gives you access to any doctor or hospital nationally who accepts Medicare. And as you might imagine, most doctors and hospitals nationally accept Medicare. Why would that make sense? Well, 1 in every 5 Americans nationally are on Medicare, and those people are typically over 65 or disabled. So who do they need to see fairly often? Doctors. So it makes sense that Medicare is so widely accepted. Furthermore, if original Medicare were your only health insurance, it means that any hospital or professional claim would be paid 80% by Medicare, leaving you with 20% to pay out of pocket. Now, if we think of 20% in the example of a doctor's visit, maybe blood work, 20% doesn't sound too bad. That might cost me $20, $30, $40, right? Because seeing a doctor doesn't cost more than $150, or getting blood work doesn't cost more than $1 or $2. But what if I need a triple bypass surgery? What if I need chemotherapy? What if I need expensive medical equipment? Do I want to be responsible for 20% of those items? No. I want some kind of additional coverage. I want some kind of supplement. So that takes us to the most confusing term, I believe, in my industry, the term supplement. Why do I say this? Because the term supplement is used very generically. Most people who've been on Medicare will use the term supplement to mean some kind of additional insurance I purchased with Medicare, and that's not a bad definition, but it's not right. A supplement is a very specific and a second or secondary insurance to original Medicare. Think of it this way. If we weren't talking about insurance and I were to ask, do you take a supplement? Well, you would know what I would mean. A nutritional supplement is something that you take in order to make sure that you get all the nutrition you're supposed to every day that your normal diet may not give to you, right? It fills in the gap of your nutrition. Use it as a mental reminder. Medicare supplement fills in the gap, the 20% that Medicare doesn't cover, and it's a second insurance you purchase to work with Medicare. Now, if you notice, Medicare on its own does not cover maintenance drugs. Now, that is one of the 4 slices of pizza. That's Part D. Part D is prescription drug coverage. But if you notice on the Medicare card, there's no mention of drugs. That's because if you purchase original Medicare and a supplement, you must also purchase a third insurance called a prescription drug plan, otherwise known as a Part D plan. Now, that might sound confusing, right? Because most people who will be listening to this message they're currently on group health insurance, and those group health insurance plans are HMOs and PPOs. So by another word, by another definition, this is what's called managed care. And managed care insurance will include coverage at the hospital, at the doctors, but also at the pharmacy. Think of it like a one-stop shop. I'm sure you're used to showing your PPO or HMO card whenever you go to the hospital, doctor, or pharmacist. So Part C, Medicare Advantage, that is an equivalent insurance but through Medicare. So to think of it this way, Medicare Advantage or Part C, those terms are interchangeable, is just like the group health insurance you're on today. However, its competitor, Medicare with a supplement, would be very different because you would have 3 insurance cards if you choose a supplement, whereas if you go with Medicare Advantage plan, yes, you do still need to have both A and B Medicare, but you would show that one HMO or PPO card, and that one card will be a one-stop shop at the hospital, doctor, and pharmacy. We'll talk more about these different styles of plan later, but what we first need to do is to understand when and how should I enroll onto Medicare? When is it appropriate? And what we're going to do is to explain 2 different scenarios. The first is of someone who has already retired and both they and their spouse no longer work and are turning 65. That means that they fall into scenario 1, which means that they have a 7-month window that begins 3 months before, the month of, and 3 months after their 65th birth month. Now, I was born in February 26th. That would mean that the earliest that my benefits would begin would be the 1st of February. That would also mean that I could sign up as early as November, December, or January before my 65th birth month, and if I were to do so, then my Medicare benefits would start on the 1st of February. If I were to sign up in February, my benefits would start in March. If I signed in March, then my benefits would begin in April. If I signed up in April, my benefits would begin in June. But if I sign up in June, well, I can't. Why? I'm outside of that 7-month window. Now, during this period of time, I can do one of 3 things to sign up for my benefits. I can go on Medicare.gov and do it online. I can call Social Security, and their phone number is in this presentation. It's 1-800-772-1213. Or I could visit my local Social Security office, and they could sign me up there as well. Now, what if I continue to work and turn 65? Am I required to go on to Medicare? Well, actually, the answer is no, because so long as the coverage that you have through your work meets a standard called credible. So credible, quote unquote, is the term that they use. Essentially, if my group coverage is credible, then I am not required to go on to Medicare when I turn 65. In fact, it would be my choice if I wanted to sign up for Medicare A or B. Now, if you are on a corporate plan which uses a health savings account, then as you can see from this slide, you do not want to sign up for Parts A or B because there is a rule from the IRS called the over-contribution rule, which will try to pull out any funds that you invest if you are also signed up for Medicare. If you are on an HSA and continue to contribute in your HSA, then 6 months before you eventually retire, that would be when you would stop contributing to your HSA, and soon afterwards, you would sign up for Medicare A and B. However, if you hear this term health savings account and you're scratching your head because you don't know what that means, well, then that certainly means you're probably not on an HSA. You're probably on a more traditional plan like an HMO, a PPO, or an FSA. Those have no issues or conflicts with Medicare Part A. So what I would want you to do as you approach 65 is to go online to Medicare.gov, sign up for Medicare Part A only, because it would work as a secondary insurance to your group plan. We'll talk more about why you would want to do that in a moment. But what I want to communicate now is that if you are like most boomers and you continue to work beyond age 65, when you sign up for Medicare Part B, you do so 60 days before your retirement. Now notice the cadence, 2 months before you retire. And the reason why this is important is that you will need to have your HR complete a form, which is called the Request for Employment Information form. With this form, you will then take it to Social Security and sign up for Medicare, giving you time to then secure some kind of other insurance, whether it be a supplement or advantage plan, so that all of those benefits would go active whenever your group benefits run out. Now, it's also important to mention that COBRA is not an option if you are Medicare eligible. So, if you are over 65, although you may be given COBRA information, you do have to go on to Medicare at that time. Now, many of you have heard, either over the phone, over, let's say, the radio, or in snail mail that you've received to your home, that there is a penalty for not signing up for Medicare in time. That only occurs if someone chooses to not enroll onto Medicare and both they and their spouse are no longer working. They're essentially choosing to not purchase Medicare because they don't want to pay for health insurance. And that is when someone is penalized. If you continue to work or your spouse continues to work and receives corporate benefits, as long as that it continues to occur, you will not be penalized. You just need to make sure that 60 days before you retire, you have that request for employment information form completed, that you deliver it to your local Social Security office to sign up. Now, that being said, let's talk more about Medicare Part A. Part A goes to cover inpatient care, hospice, home health care, and skilled nursing. So you know, skilled nursing benefits are a short-term rehab stay in a facility. It is not long-term care. Now, why would someone enroll in Part A if they're still working? Well, Part A is technically free. I say technically, so long as you have worked for 10 years, then really you've earned Medicare Part A at no cost. But Part A covers 100% of hospice care. We don't want to think of it, but a reality of life is death. And hospice coverage is not covered at 100% by your group coverage. However, with Medicare it is. So that's why someone would elect Part A even if they're still working, because it's free, it can only help you, it cannot hurt you. Part B, on the other hand, is different. Part B covers many more services than Part A, because this includes anything to do with a doctor, both in or out of a hospital, diagnostics and labs, any kind of physical, behavioral, or occupational therapy, chemo and immunotherapy, outpatient as well as inpatient surgeries, and a litany of other items, including preventative care. Part B, per person per month, typically costs $135.50. So if you're thinking of yourself and your spouse, then multiply that by 2. You're paying essentially $271 a month as a couple. Also, be aware that Part B does have a surcharge if you make more than certain amounts. If you are an individual and file as an individual and report more than $85,000 in income, or if you are a couple and report more than $170,000 in income, then you will have an increase to your Medicare costs. This policy is called the Modified Adjusted Gross Income Surcharge, or IRMA. And as you can see here, there's a gradual increase to your premiums based on your reported income. Now, Social Security will use the adjusted gross income reflected in your tax return 2 years ago. So if you were to retire in 2019, They look at your 2017 tax return. They will always do this, meaning that every year they'll look back 2 years to that tax return to assess what your premium is. Now, one thing that is worth mentioning, most people when they retire are going to have what type of change to their income? A decrease, right? Because you're no longer receiving your salary. Now, if that is the case, then please file an appeal with Social Security if you are deemed one of these surcharges. All you have to do is call Social Security when you receive the letter notifying you of your surcharge amount. Basically call and see what information you need to submit to Social Security in order for them to lower your surcharge. This can be a very confusing thing. So if this isn't jiving, again, feel free to send me an email and you and I can talk through this to make sure it makes most sense. Now, one thing I'm going to be brief with is something that's called the donut hole. The donut hole is a nickname to a rule book. This rule book is called the Medicare Expansion Act of 2003, and it instituted for the first time maintenance drug coverage for those who are on Medicare. This is something that dates all the way back to 2003, and what it does is it essentially puts a limit as to how much Medicare or Medicare insurance will pay for someone on Medicare for their drugs. Now, this rule book applies to a Medicare supplement or a Medicare Advantage prescription drug plan. So unless you've got some kind of union group protection or you work for the state, there are no loopholes through this rule. It is good to know, however, that come 2020, this rule book is going to be eliminated. So the donut hole will be replaced with, I don't know, a bear claw, a croissant, a muffin, some other kind of pastry joke. But let's look into this. The donut hole means that when you are on Medicare, and Medicare plans work on a calendar year, when you begin in the initial coverage from plan, and you can spend $3,820 against the cost of the medications you take. It is during this time that you pay a defined copay or coinsurance as stated by whichever insurance company you purchase from. So it's typical to pay $5 or $10 for generic, $30 or $40 for brand, maybe 10, 20, 25% for a specialty drug. So long as you still have money in that bank of $3,820, all you pay is a copay. If you do not go beyond this amount, then all you ever pay are copays. And really, the donut hole doesn't apply to you. However, if you take one or more brand prescriptions, then that $3,820 will not be enough. It will not last long enough to cover your whole year. At some point, you will fall into the coverage gap known as the donut hole. Now, it used to be the case that you have little to no coverage in this gap, but that has since changed. Of all things, the Affordable Care Act has greatly improved Medicare coverages over the past few years, and that's reflected in a 37% coinsurance for generic drugs that you would purchase in the donut hole, as well as a 25% discount on brand. So what does that mean? That means that you are responsible for 37% of the cost of your generic. The other 63% is paid for by government. You are responsible for 25% of your brand name costs. The other 70% is a discount forced on the manufacturer of your drug, and the final 5% is paid for by your insurance. Now, if you spend out of your own pocket more than $5,000 out of pocket in a year, then you will move to the third layer of coverage called the catastrophic. However, also keep in mind that when you are in the donut hole and paying 25% for your brand name drugs, the 70% that the drug manufacturer is paying, that discount, you also get credit for. So what this does is it actually lowers how much you are spending out of pocket and pushes you through to the catastrophic more quickly. Now, this is probably the most confusing aspect of Medicare that we'll talk about during this webinar. If you have any questions, if this isn't making sense, again, send me that email. I'm happy to connect with you to make sure that this is understandable. One thing I will mention, though, if you are thinking of retiring in 2020 or later, don't be concerned by this. It does not apply to you. It's good to be aware of it, though, so you can appreciate the differences of how Medicare covered drugs up until this point versus how things will be covered next year and years moving forward. So now we've come full circle. We've come full circle because now we can talk about the differences between Medicare and a supplement versus its competitor, Medicare Advantage. This slide and page 4 are actually the same, but in page 4, we were able to define A, B, C, and D, and the differences between a supplement and an Advantage plan. Here, we can now see the differences between a supplement versus the Advantage plan. As you can see, if you go on the left side of the slide, that means that you're purchasing Medicare with a second drug plan and a third supplement coverage to fill in the gap that Medicare doesn't cover. Or you can go with Medicare Advantage, which replaces original Medicare, meaning you still have to purchase A and B, but your hospital, medical, and drug coverage would all be under one card, that Medicare Advantage, HMO, or PPO. Now, if you go with Medicare and a supplement, why would you go that direction? As you might imagine, it is more expensive because you are purchasing more coverage, and it can be more confusing since you have 3 ID cards and not one. Well, many people have pursued Medicare with a supplement because when you keep Medicare as your primary insurance, well, that means that any doctor who accepts Medicare nationally would accept you. If during the time of this webinar you're hearing this message and you're calling in or listening in from Western Pennsylvania, you might know that a group of people wearing purple and a group of people wearing blue aren't getting along right now. And all kidding aside, that's a huge frustration for most in the city of Pittsburgh. Why? Because based on your insurance, you may no longer be able to see the doctor or the hospital who you've been accustomed to. You might literally have to change your doctors and hospitals because your insurance won't let you go where you want to go. I call this agency. Agency is a term that I use to define my ability as the patient to have agency, to have choice, to see any doctor or hospital I want. If this is something that's important to you, I would strongly suggest you look into Medicare and a supplement, because anywhere that Medicare is accepted, if you keep Medicare as your primary, well, guess what? You're accepted. So that means you've got great portability, not just in Western Pennsylvania, but all throughout the country, because Medicare is the most widely accepted insurance in the 50 states of America. Furthermore, Medicare covers 80% of your costs, and a supplement can cover, as near as makes no difference, 20%. So any of your hospital medical costs could be completely covered if you go with Medicare and a supplement, and that is an excellent benefit. Think of it this way. When was the last time you heard your medical insurance is going to cover 100% of your surgery? Well, with Medicare and a supplement, that can be true. Yes, you are going to pay a higher premium, and yes, you will still have co-pays for your prescriptions at the pharmacy. But for those of you willing to pay more to have a stronger medical plan, this would be a better option for you. Now, if you are in general good health, and in general you aren't looking to have the best and the most expensive insurance, let's say you're looking for something good that's reasonably priced. Let's say you're in great health as a 65, 66, or 67-year-old. You don't need all the bells and whistles. Well, a Medicare Advantage plan should be a better fit for you because these HMO and PPO plans do have very competent benefits. Now, is it 100% coverage? No. When you go to use a service, you will pay a copay. You may even pay a coinsurance. But you should see an improvement to the quality of benefits you have with an Advantage plan versus the insurance you're used to through your employer. Furthermore, when we talked about Medicare and a supplement, did we make any mention of dental, vision, or hearing? No, we did not. If it's something medical in nature, then of course it's covered under your Medicare medical benefit. But A and B and D cover hospital, medical, and drugs. A supplement only works within those benefits. Whereas with an Advantage plan, if you want preventative dental, preventative vision, hearing, gym memberships, these are all benefits that Medicare Advantage plans do cover that supplement plans normally do not. And because you're only purchasing one additional product, not two, an Advantage plan is seen as a more economical choice. Now, if you make a decision, you pick one or the other, are you locked into that decision for life? The answer is no. There's something called the annual election period, which occurs nowadays between October 15th through December 7th each and every year. And it's during this time that if you want to make a switch, you're able to do so. But be aware of one thing. When you first sign up for Medicare, you have complete freedom, complete autonomy to purchase either an Advantage or a supplement plan. If you first purchase a supplement and later on in life choose to go with an Advantage plan, so long as you do so in October, November, or December, you can do so. There's no medical underwriting. There's nothing to prevent you from doing that. If you go from one Advantage plan to another, let's say you go from carrier A to carrier B, or you go from an HMO to a PPO, well, you can do that. So long as you do it between October, November, and December, you're fine to do that. However, if you switch to an Advantage plan or start with an Advantage plan and years later try to go from the Advantage plan to the supplement, there will be medical underwriting. Why might that be? Well, if you think about it, you're purchasing the more expensive coverage. Why? Because you need it. You probably have been diagnosed with something significant and you want that upgraded coverage. Now, I mention this because similar to the fear of this late enrollment penalty, there's also another fear that people often have that when they're eligible for Medicare that they have to get the supplement because if they don't get it, they won't be able to get it later on in life. And the reality is you probably can still get a supplement. It just will cost more. However, if you haven't needed it or used the supplement for years because you've been healthy, then that also means that during that entire time, you've been paying probably much more for coverage and really not needed it. So some practical advice. If you are interested in a supplement but you're not sure and you're turning 65 and need Medicare, I would suggest you go with the supplement just in case. However, if you're in good health, you don't need all the bells and whistles, you don't need that stronger, more expensive benefit, an Advantage plan will work just fine for you. Don't use that medical underwriting to be a fear tactic that pushes you to buy insurance that you really don't need. The best thing that you can do is truly understand what you need of coverage, and when you work with the broker or when you work with me, tell us what you're looking for, and we're happy to serve and figure out what makes the most sense. Now, what we wanted to do was to really make sure that we went over the basics with good detail, but I also did not want to make this recording more than 30 minutes, and we're already a couple minutes past that. So you can tell there's a lot of substance with Medicare. So I'm showing you now my contact information. Since this is a recording, I'm sure you can pause and either call me or, even better yet, email me with any of the questions that you've jotted down while listening to this recording. That being said, I want to thank you for your time and attention. If there's anything that we can do, whether it be Henderson Brothers Benefits, Henderson Brothers Personal Insurances, or a retirement team, you know how to get a hold of us. Thank you. Have a great day.